Oh, thank you for watching this video. In this video, I'm going to talk about how to calculate debt to asset ratio. So for this example, I'll be using QuickBooks Online. So in order to calculate debt to asset ratio, Uh, well, first of all, what is debt to asset ratio, also known as debt ratio, is a solvency ratio. Is to determine the proportion of a company's assets funded by debt, your debt, short-term, long-term debt, rather than by your own equity. So the formula to calculate the debt ratio is equal to total debt divided by your total assets. Is pretty straightforward. Total debt divided by total assets, right? So what's included in your total debt? So it could be anything you owe to somebody, someone, So it could be accounts payable. It could be your long-term loans that you borrow from banks or some financing companies, or the simple credit card loans, and could be like a notes payable and any other interest bearing security you put to borrow money. And the total asset is basically the total bank accounts or any other bank type accounts, a savings, treasury, whatever you have, and accounts receivables that you can collect from your customers, clients, and inventory if you maintain inventory, and your fixed assets you buy, any kind of equipment or furniture or whatever you have, and then in some balance sheet you may have some other assets. So I have the balance sheet on the right side. So in this example, I have a $512,000 total liabilities. That's the total debt, and then I have a total assets of uh, 1. 1.5 million, $5 million. So 512,000, and the total assets 1564. That's all thousands. So in this example, debt ratio is simple. It's a 0.33 times. Right? So total debt is 512, all in thousands, and the total liabilities, total assets is 1564. It's So it's just simple formula in here. So 0.33. Okay. So now I'm just gonna go to the QuickBooks Online and go over this a little more. And be sure to subscribe to our YouTube channels and leave a comment if you have a question. So I'm gonna go to QuickBooks Online and go over this. Okay, so I'm on QuickBooks Online now. So I'm just going to run the balance sheet summary. As you can see here, in this case, total liability is 1564, as I said. And if you just click it, it will give you all the details, all the details in here. We click it here. Okay, so it's 1564 is your total assets, and then the total current liabilities. You have 154, and then you have some long-term liabilities. So that's how you get to 512. 512 divided by 1564. So that's the ratio. And if you need to see what's included in here, you can run the other reports, and you can get the details in here. Okay. Hope this video is helpful to you. Thanks for watching. Bye.